Welcome back, buddy.
Hey, how are ya?
Been a while,
Been a while.
pre-COVID since you and I talked. So,
I
well,
know. Funnily enough, it was around this time last year, I believe, when we spoke last. It's right around my birthday because I'm up in my hometown in the interior of British Columbia visiting my folks.
oh, nice. Okay, buddy. Do you know how to use Zoom to share your
Yes, I
screen? Or
do. I'll share my screen here. Give me half a second.
okay,
All right. Can
there we
everyone
go.
see my trading view screen there?
Yeah. You're zeroed in on the reversal we had yesterday in stock indexes.
Yeah, so I'll start with Bitcoin because that seems to be one of the things I'm known for, even though Bitcoin has not been very fun to trade for the last handful of months. So anyone watching who follows me probably has noticed I've not been posting a ton about Bitcoin lately. And I mean, if you look at the price action, I think, the reasoning is quite obvious. We're not really going anywhere. Um, One of the things that I think is an issue with, kind of the crypto Twitter community is people get really zeroed in on Bitcoin as being like the asset they have to trade, or an altcoin or whatever it is. And sometimes Bitcoin suffers from very, very, very low volatility. If you look at kind of like the average daily range on Bitcoin for, the last month, it's minuscule. So what I always try and preach to people is your skills are transferable. So if you kind of cut your teeth learning how to, mark up charts and trade Bitcoin, you can take those tools and you can apply them to other markets. And there's so many other markets that have been trading so cleanly and with so much volatility. I mean, specifically the S&P is what I've been focusing on of late. So I definitely would suggest, kind of take off the blinders, open up your horizons a bit. If Bitcoin's not in a bull market or a bear market, there's a bull market or a bear market going on somewhere in some other asset class. So real
Sound
quick
like
on
Jim
Bitcoin,
Cramer.
because
There's always
yeah,
a bull market somewhere.
exactly, right?
Okay.
So that's what most people don't realize, right? We're just comparing two assets here. In this case, it's Bitcoin versus the dollar. And right now it's relatively flat. So, I mean, if you just kind of look on the whole, we had that, massive move up to 14,000, what everyone assumed was the bottom. And then obviously we had this coronavirus, you want to call it a black swan event. I don't know what you want to call it, but this was obviously just very closely mirroring the stock market. And since this March low, Bitcoin and the S&P have been moving relatively in lockstep in terms of their correlation. I've always been a proponent of the correlation between Bitcoin and the S&P. A lot of people are like, oh, they're not correlated at all. Bitcoin is its own beast. But to me, if you look at the charts kind of on the high time frame, Bitcoin to me is absolutely a risk asset. There's no doubt about it. It moves with other risk assets. I mean, it's only existed during a bull market in the S&P, and most of the major ups and downs we've seen in the stock equities market have been pretty closely tied to Bitcoin, including kind of the blow off the top on risk assets in 2017, being the top in Bitcoin here, the pullback, then the next little run up. This was kind of your last high. And then obviously we saw the coronavirus. And then since then, the correlation's been, kind of extremely tight. So I think, watching Bitcoin and not watching, other risk assets, specifically, I like to use kind of the S&P as my proxy. In tandem, I think you're kind of doing yourself a disservice there because there's a lot of information available there. If you go and look just at the charts, Bitcoin actually started its crash like a day before the S&P, and then since then they've been very closely correlated, maybe one leading the other by a couple hours, a couple days. So to me, until we get a confirmed bottom or confirmed top on S&P, I'm not going to try and determine if this range is really going to break to the outside or downside. But for now, I'm leaning slightly bearish on Bitcoin. To me, the levels are very clear. I think 10,100, just to round it off, which is essentially the top of the range here, and 8,700, just to round it off again, which is essentially the bottom of the range here. those are my two key levels. So if you're sitting in Bitcoin, or if you're saying, okay, when do I buy back? At what point am I confirmed we're going up? At what point I confirmed we're going down? I mean, if you're day trading this thing, that's a different story. I'd say maybe get your eyes checked, because I don't know what you're day trading here unless you're on the, minuscule time frame.
And couldn't you really say the same thing about a lot of other asset classes that we really we do have binary markets where the only difference is magnitude. You could have put up a silver chart
Yeah,
with the S&P, and it was the same thing. You could have put up a crude chart, and it was pretty much the same thing. So risk on is being long anything, and risk off is don't be long anything. And isn't
exactly.
that what's happening here in your view?
Yeah, you could argue that Bitcoin is, a risk asset with higher beta, right? So like you
Okay.
said, in terms of magnitude, more volatile. So when the S&P crashes, Bitcoin crashes harder. When the S&P or the equities risk assets pump, Bitcoin pumps harder. That
Okay.
would be kind of the easiest way for me to describe what Bitcoin does. I don't think Bitcoin has a use case as a currency. So I think that's why people think it's like, oh, it's got this deflationary aspect. It's like that only matters if it is actually being used for currency. To me, Bitcoin is much more like a gold or a silver, a store of value. Um, for me, the levels are clear here. If you're like, what to do on Bitcoin, I think you wait till you see one of these two kind of areas interacted with and then breached. If we break to the downside of 8,700, I think we're going to a minimum of 7,800. So that's, nearly 1,000-point move. I think we'll retest, this consolidation in here. Is the low in? I would like to think so. I think a lot of money changed hands here, but if the floor falls out on equities again, anything is obviously possible. But I think if we lose 8,700, I think you can get into a short trade pretty comfortably down to a minimum of 7,800. But really, my area of interest on Bitcoin is kind of this little consolidation here before this last large move up. This seems to be an area that's untested to me. So that's
Okay.
kind of about 68 to 7,200. On the upside, above 10,100, I think we're going to run all of these highs here. So this high never actually ran above here, And I think as Bitcoin generally does, it usually goes a little higher than you ever expect. So I do think if we can get above 10,100, even just above 10,000 again, I don't see us coming up there again and not breaking through. I'm expecting about 11,500. That being said, that's very much in line with and dependent on what I think is going to happen in the S&P. This has just been a crazy market to trade of late. There's been some serious volatility, some huge moves. I mean, I don't think I know anyone who kind of predicted this V bottom. Or did you talk to anyone who in March was saying this thing's going to march straight back up to 3,000 2 months from now?
Yeah, me. It's on tape. But I didn't ride it there. It was a falling wedge, and the breakout was about 2,400. But
yeah.
yeah. But
And then
I started turning negative around 29. So yeah, there were reasons to buy it down there,
so
and I'm sure I wasn't the only one.
I got long as well on the way up, but I didn't think we were going this high. I was kind of looking at a fractal, if you will, of kind of the 1987 recovery,
Okay.
because that was kind of like the closest. I know a lot of people wanted to compare this to
29.
they want to compare it to the Great Depression. And I mean, maybe fair enough, but to me, this kind of seemed more like here 1987, where we had the huge fall off the cliff and then literally just the entire thing reversed. And maybe that's what we're in store for now. It's really hard to guess what's going to happen with
It
what's
took
going
much
on.
longer though, didn't it?
It took
87.
it took
Yeah.
much longer, and it was more of a sustainable trend, if that even makes sense. It kind of marched up a little bit more. This has been almost vertical. I mean, if you're looking at this on the weekly, you don't see a lot of black or red candles here. and the white candles, the green candles are really wide bodied. So to me, we have a couple key levels that I'm watching for on the weekly. I mean, obviously this kind of area is of interest to me. This is your last kind of down move before the final high. So this is kind of where I got that, 32, 31 level. I'd put this up on my Twitter last week. I said, this is going to be an important level. And that's exactly where we reversed from, was just the lows of that consolidation there. So to me, I think if the bears are legit, this needs to push down the rest of the week. And I want this to be obviously the high of the week. I have a nice level here, about 30.70 of interest. But to me, I think if we get all the way down here, I actually don't expect this level to hold. I expect it to give us a little bit of a bump. This is more of a level of interest to me. The reason I like this kind of 27.37 level a little more is I like levels that have taken out a previous low when they got formed. So if you see this level here, the top of it, we took out this low, and then we created this kind of down candle, and then the move up came. So to me, this is going to be strong support here. And I think it's reasonable to expect that we get a solid bounce here. But in terms of kind of like macro direction, since March, I've given up trying to, call the top or the bottom, on the move. I don't know if the market is topped yet. I don't know if it's bottomed yet for sure. I think the best thing you could do right now is, as a trader, is embrace the volatility that we have. Be excited that the markets are moving, giving you some of these, really long, kind of ranging environments that are really easy to trade, or giving you really kind of clear directional bias on some of these currency pairs, and just enjoy that. Don't get caught up in trying to be the hero on Twitter who's calling a top, calling a bottom. I think you're much better off. This is a trader's market right now. Just between, equities, there's so many stocks that have been amazing to play, super clean to play. So take it as that. Take it as an opportunity to, look at different markets. There are a lot of markets that are trading cleanly, but I think you can really get caught up and caught offside if you're going to try and be the guy or girl who's saying, okay, this is the market top, this is the market bottom. I think if you're looking from a long-term perspective on the stock market, I mean, I think, it's just kind of common sense. If you're not putting some money in the market when we're down, double-digit percentages, off the high, when we're a 30% haircut on the S&P, if you're not getting any money in the market involved at that point from like a long-term, maybe it's your retirement, your account, your 401k or whatever, I think you either need to talk to your financial advisor or yourself and, realize there's a time to average in, there's a time to not. But from a trading perspective, I think, this is a trader's market right now. Enjoy the volatility.
Okay, so I'm assuming by that comment that you think eventually we're going to, well, eventually could be a long time, but that this is just a little correction in the S&Ps, and probably if we get one in Bitcoin to the levels you spoke about, that they provide long entries for new highs of this rally.
That's my kind of overarching assumption. I mean, I can absolutely be wrong, but to me, anytime Bitcoin is, trading near that kind of $6,000 to $7,000 figure over the last 3 years, it's been a pretty good buy outside of the two occasions where it was below 3,000, but it didn't last, or down to 3,000. It didn't last down there very long. I am still of the mindset that Bitcoin is going to new highs. I think what we're experiencing now, though, is, kind of the law of, diminishing returns. I think the peaks, are going to get, this is not a good example here. This chart shows you a little bit more. So you can kind of see on the logarithmic chart, right? You can draw, a curve here, right? Almost. So I do think we are going to continue, we're continuing around up this, this curve. I just do think that the peaks are going to get, the magnitude of each move is going to be less, right? Maybe we're not going to see a 30x this time from the bottom, but even if Bitcoin goes to, 50K, which is only a 2.5x of the previous high, that's still 50K for one. So I do think we're seeing that kind of law of diminishing returns here in terms of, the cycles on Bitcoin, but I do believe that, we're trading near that, kind of curve. This is going to be upside down, but on here.
Like a parabola.
Exactly, and the parabola is it's losing its, it's flattening out. But I mean, for the most part, I mean, why would you bet against history? And with the S&P 500, I mean, I guess that becomes kind of, a geopolitical question as well. Is the U.S. losing its place as the superpower in the world? Are U.S. assets still where your dollars, the big money is best spent, or is this going to start moving to a China or something like that? I'm still of the mindset that the U.S. is the place you want to be, and that the dollar is the kind of gold standard currency. That can obviously change, but I just don't think it's quite ready to yet.
Okay.
I'm
So
leaning on the U.S. surviving.
Okay, good, because I live here.
Yeah,
So that's good news for me. I appreciate that, Mayne. So you talk about the gold standard being the dollar. How about gold itself, which is
yes.
challenging the 2011 highs, about $80 away?
So if you remember when we were here over a year ago, I believe gold was trading way down here, kind of at 1200, and you and I were both talking about having a bullish year for gold. Um, so I hope you heeded our own advice, because I mean, I've definitely been longing gold a lot. Um, so I was watching this kind of area up here to get run, and it finally did. These highs here. Um, to me, this move is getting, kind of long, but overall, I'm expecting one more push higher on gold. A level I like is 1822,
Okay,
which
it's
is
interesting that
essentially, which
just
is
a
essentially
marginal new high, just a marginal new, take out last week's highs by a few bucks,
exactly. It's
clean
essentially
out shorts and diverge.
exactly,
Okay,
exactly. So I mean, look at the weekly, right? We've got one, two, three, four, a fourth green weekly candle in a row. So I wouldn't be surprised if we can just get a little bit higher, come up into these highs here. 1822 is a level I like, and then see some sort of correction. I mean, there's a lot of room that this can fall. On the higher time frames. So you obviously got to be aware of that. But I think after breaking out of this, multi-year kind of range, the expectation that the move that was going to precede it was going to be a large one. So I am leaning, on Team Peter Schiff, you could say, that
okay,
gold will see, new highs, and I think silver is the laggard. I think if you look at the gold silver ratio,
yeah,
it was completely out of whack for a long time. And generally, what happens is you see gold run and then you see silver run. And I think you see the exact same thing that we saw on gold here about to happen on silver. We're in this, very long, drawn out range on silver. We had a huge move to the downside here, right, during the coronavirus
right.
thing. And I think, once we're getting over this kind of 21 handle, silver's got a lot of upside. And I think gold will cool off. We'll see gold go a little more sideways, but I have no doubt that we can see, $30 silver once it's able to kind of clear this high. Because to me, there's a lot of room right here. And if
Okay,
we can break out of this range, I'm very bullish on silver.
I forgot what a disciplined, excellent technician you are, Mayne. So really some crystallized looks that you've given us. I'm a little bit pressed for time,
No
but I
problem.
want people to be able to follow you at Trader Mayne. And if you'd like, you could show your website now and tell our viewers that are watching it live and then watch a recording the best way to get a hold of you and get involved with you.
Yeah, absolutely. So, I mean, the best way to get in touch with Trader Mayne would be to just DM me on Twitter.
Okay.
I've been actually taking a little bit of a step back in terms of putting out a ton of content. I've been taking the summer. I mean, coronavirus for everyone, right, has been, I think, a very weird time, and I've been just kind of spending this time. First of all, in the markets, because the markets have been great, but just also kind of doing, some reflecting, trying to spend some time with my family, making sure my health, everyone that, I care about's health is in order. So I plan on kind of getting back on the saddle in terms of, posting YouTube videos, things like that on a more consistent basis. So if you want to talk to me, you want to get in touch, best way to do so is through Twitter. If you tag me, I will see it. That's at Trader Mayne, Mayne, or on YouTube, youtube.com/Trader Mayne. I'll be posting. My goal is to do at least one video a week, some sort of live stream where I'm talking about the markets. I always have a Q&A box going, so you can ask me questions there. Would love to interact with any of you, and I obviously hope I'll be back here one day again soon.
Okay, Mayne, let me, before I say goodbye, any type of longer term view on COVID-19 and, is it going to be with us forever? What's your outlook for the pandemic?
Sure. So let me start with a disclaimer. Much like my trading, I'm not a a
Right.
certified financial analyst. I'm not a epidemiologist.
Just an opinion.
Or a doctor. But initially I was very bearish COVID. I was the guy who was like, okay, we got to stay inside. We don't know what this is, but it's been several months now. A lot of the data is coming out, and I do not want to downplay any of the death at all, because any sort of death is horrible. But when you're looking at the numbers in the U.S., it's not good. 150,000 people dead, but it's also, I don't think, nearly as bad as we had originally anticipated. Regardless of what the media may tell you, 600 plus thousand people died from the flu in 2018. So if you're kind of tracking out where we're at with COVID right now, those numbers are kind of similar. What it seems to be is it's much more contagious. And it seems to be deadlier in higher risk people. It sounds to me like this is something that might just be part of our lives. Much like the flu, you can get a flu shot every year because the flu changes, it mutates, and there's a good chance that this can change and mutate. So I think the social distancing, what we did is flatten the curve, make sure we don't overrun the hospitals. But I don't think anyone thought that it was going to make it go away. It more was just kind of delaying the inevitable. I don't personally think this is the second wave. I think this is just the delayed first wave, because everyone was inside. You let people out again, it starts spreading. So I think it's going to be very interesting to see where we are come Christmas time, come the election time, if there's a real second wave. And this thing maybe dies off a little bit over the coming months. But I think we're going to have to return to some version of normalcy. I don't think the death rate is high enough to justify shutting down the economy, shutting down, everything. I think what we need to do is people who are high risk need to be more careful. And I think we need to, hope that there's a vaccine of sorts. But it does sound like this is something we're going to live with and have to learn to deal with.
Okay, well, you're talking about this fall, so later on today, why don't we touch base on Twitter and get you scheduled for October? Should be an interesting fall with the elections here in the U.S. and everything else. And I want to thank you for coming in again and edifying the F.A.C.E community, my trading warrior brother, Mayne.
Thank you, sir. All right, Dale, enjoy the rest of your day. Have a good week, and we'll talk to you soon.
Happy birthday.
Yes, thank you. The big 3-0. I'm getting old.
Oh, yeah. I'll trade with you. All right, buddy.
Talk to you later.
Happy birthday. Trader Mayne, everybody. We'll see everyone tomorrow.
Thanks, guys.
All right. And remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Adios.